to our session today. We are delighted to be here, and we are expecting approximately 100 people today. Welcome to you all. I know at least 50 are with us already, and no doubt several of you are logging in as we speak. So welcome. Welcome to How to Make Your Move to Portugal a Financial and Practical Success. Now today, our session is no more than 40 minutes long because we know that it's better to keep things short and sweet. 20 minutes of myself and John chatting and exchanging useful information, and then approximately 10 or 15 minutes of questions from the audience. Now, we've already had some very, very good questions sent in to us overnight. We'll be looking at those, answering those, but please feel free to ask us questions during the seminar. We'll tell you how. We are recording this, and it'll be available on the movingtoportugal.org.uk website very shortly. And today, as I said, we're here to talk about how to make your move to Portugal a financial and practical success. Now, the pandemic is forcing some older workers to confront painful financial realities and revise financial plans for retirement. Now, one option, obviously, quite a lot of you are considering, is retiring abroad to a destination that's more tax efficient and offers other lifestyle benefits. Enter Portugal, of course. So our aim today is how to make your move to Portugal a financial and practical success. Our guest today is Chamber Member John Mather, who spent the last 47 years working in the financial services sector. He's recently retired to Portugal, more specifically the beautiful island of Madeira. Now, some of you will recall we did run this webinar 2 weeks ago with John. It was massively oversubscribed, so we're doing a second one today, and we will cover very briefly the issues that we talked about before and cover some new ones as well. I'm going to moderate the webinar, and John will explain some of the financial implications of the pandemic for older workers and savers, and he's going to detail the reasoning behind his choice of Portugal for his retirement, which should be interesting because he's a financial services industry veteran and he's decided on Portugal. So we're going to hear why. We're going to discuss these issues for approximately 20 minutes, then take questions. Feel free to ask questions using the Zoom Q&A box on the right of your screen. I'm sure you can see it there. Now, some of you will know me already. My name is Christina Hipsley, and I'm the General Manager of the Portuguese Chamber of Commerce here in the UK. In normal times, if you can remember those, I can't believe it's going to be a year almost soon, we do lots of live events and seminars in the UK for the British that want to move to Portugal or buy property. And have a look at our dedicated website. It's movingtoportugal.org.uk. And our next big live event, which we can't wait to do, is on the 20th of April 2021 in London. Hopefully, based on the news of the vaccine and all sorts of glimmers of hope that we've had in the UK over the last couple of weeks, 10 days, we are hopeful it'll take place. We have plans to make it happen at any cost, I can assure you. And so do come and see us if you're in the UK. Central London, 20th of April 2021. So, how do you make your move to Portugal a financial and practical success? So here's, you know who I am. Let's talk a bit to our guest, John Mather. John, thank you so much for joining us today and taking time out of your busy schedule. Tell us a little bit about yourself. Where do you live in Portugal? Madeira, obviously, but why Portugal and what do you do?
Well, it's 22 degrees here and sunny today, so I'm sorry to mention that, but that's one reason.
One reason why you're there. Yes, thank you.
And I don't think you really need to know too much about me. People are interested they should be interested in themselves. All I know is that all financial services never die; they just go out of commission. So,
so you're resting in Madeira.
But no, I had a reasonably successful business from 1973, and fortunately I was bought out in 1988 by the Prudential and a few others, and then went back into the business again. So because I retired, trying to retire at 40 was ridiculous, and I got bored after 6 months. So I've enjoyed the ride in financial services for quite a long time. And funny enough, when I got out here, within 48 hours, I got 2 offers of jobs. So I'm actually working part-time on a 3 mornings a week basis.
Which I'm sure will creep up, John. So we've established that you obviously had a successful and long career in the UK building and selling financial services businesses. So tell us a little bit about the summary, your financial and lifestyle thinking that decided your move to Portugal.
Well, I'd always wanted to retire and get rid of the winter. And originally the planning was to go in 2018, but unfortunately my wife became ill and unfortunately died. So, if you want to make God laugh, tell him your plans. Mm-hmm. So but I was fortunate to get remarried 5 years ago. And Martha and I had a look around. We decided to look at Portugal in some depth. And that was quite a journey in itself. We investigated lots of areas, did lots of comparisons, which I'll go on to a bit later. I've got some illustrations of that. But you've got to start with basics. You've got to start, if you put the slide up, you've got to start with the basics. And first of all, you've got to get your fundamentals right, your basic cost right. Then establish your discretionary income. And then, because of inflation, you're probably going to have to carry on accumulating for some time to make sure that your income goes up over time. So I think when you look at some of the average equations, the next slide, please. What you can see is that average incomes in the UK, and it's a pretty crude measure, are about 45% greater than in Portugal. You can see there that in the United Kingdom, the average salary is in euros, it's 38,000, just short of 39,000 euros. In Portugal, it's 26,000. From the graphs, you can see over time that salaries have continued to increase. So that's important that you build in increases into your future income planning. Next slide. You also need to look at then your costs. Now let's look at the costs in Portugal as a whole on some of the basics. Consumer prices down 25%, rental prices down 28%, restaurants down 41%, groceries down 24%. So compare that more specifically for my own situation, moving to Funchal from London. If we put the next things up, the advantages are even greater. So just on the very basic thing, your money's going to go further. You're going to be able to enjoy, at least that you can judge the standard of living that you had now compared with the standard of living you might have in Portugal. So that's pretty important to get those things right. Next slide. And then what I also found, it's common here to the UK, I found that people totally underestimate how long they're going to live. And that's normally by about 10 years. Whereas if you look at the reality, you've got two people at age 65 have a 50% chance of getting to age 92 and a 25% chance of getting to 97. So whatever you're thinking, you're actually looking at quite a long time in retirement, probably 30 years plus for this couple. So let's have a look at getting comfortable as well. When you first move, you've got to be very careful because initially you've got this huge boost to your standard of living, but that's going to have to last you a long time. So I would urge you to be cautious and build in some inflation linking into your planning. I'll come on to some other moves, but essentially, what you'll find is that if you've got the planning right, then you're going to be more confident about your plans. You'll feel better prepared. You're going to improve your financial literacy for those who've not been in a job or a career which is that numerate. You get more peace of mind as a result. Also, you'll find that there are different attitudes from men and women. They see some of the benefits differently, and you've got to accommodate that with couples because eventually it will be one of those in the couple that are living here. One will die before the other. So you need to make sure those things work for you. That's the last of that slide. So then so what are the main summaries? I think we can deal with that. Should we deal with that now, since we've got that slide up there?
Yes, if you want.
The currency issue worries me. You know, when you look at the pound, say this goes back to 2000, the pound has dropped 30 odd percent, 35% since 2000 in buying power. Next slide. Even since 2016, we've dropped over 20%. So if your income is in pounds and you're spending in euros and you've got inflation going against you, that's going to be a problem. With only 2 or 3% inflation, your money is going to halve in its buying power over 25 years. So you need to take seriously about that and make sure those things work very well for you. Okay.
Okay.
So,
should we go to the next slide and then go back up to the subjects that we were discussing, or how would you?
Well, if you pull the next slide up, and what I mean by how do you practice? Practice on paper. Produce a cash flow plan, or work with an advisor maybe on this to make sure that your personal circumstances are properly reflected in what you're doing, right? You will hopefully generate some spare capital from, effectively, as we've done. We've downsized. We looked at the situations on downsizing once we were here, but in fact, there are some capital gains tax problems when you sell your house in Portugal and don't reinvest the whole of the money. There is a capital gain to pay on the excess. So, but practice on paper. There are not that many parameters. Personalize it. And if you look at the next slide, what you should finish up with is a very smooth use of the money over time. You can see that on the grey area on this example. These are the uncertainties that we have in the planning. And what I'm really saying to people is make sure that you are, over time, adjusting, correcting, constantly monitoring this cash flow. And you should then have a successful arrangement. In this example, I picked somebody age 62 who wants to live at 75% of their current income standards, not taking full advantage of the buying power here, but maintaining at least what they've got, and then allowing them to increase that income over time, up with, in this case, inflation running at 3% a year. The result here is this 62-year-old, I think if you hit the button for the next build on this slide, it should show that this, at age 94, this guy's still got £700,000 in his plan, and he only invested 600. So that would be a very stable outline, a very, very stable profile for a client. Okay. So, okay, I think we dispose of the slides now.
Yeah, if you go to the next slide, we'll go to the final slide, and then we'll return to the questions we were discussing. Do you want to talk a little bit, John, about your concerns around pensions?
Well, the first thing about pensions, a lot of people this year are going to have gaps in their national insurance record as a result of moving or being made redundant or furloughed, or in fact businesses going bust. But have a look at the state pension, because at the moment you can make up the any gaps in your history, and it's a relatively modest amount of money that you can actually invest. It's about £760 or thereabouts. That results in an increase in the state pension of over £250. Now, where do you ever get a 29% return on money that's index linked in some way? So long as governments keep their promises, of course, with that caveat.
Yes, well.
So there are simple things to get right.
So that's just to reiterate to anyone watching. I'm sure you know this, ladies and gentlemen, but if you are missing any of your last 6 years of contribution to your state pension here in the UK, you can make it up by, you'll have to pay the government £796 for any missing year in the last 6 years. But just to reiterate what John said, that means you will get an extra £232 every year of your state pension. There is no investment on earth that can echo that. But as we've said, it also depends on the government continuing to pay state pensions at the rate that they are. Anyway, John, I think we've finished those slides. So now I suggest that we go back to the document that we're working from to discuss.
You were asking about the fiscal points there, weren't you?
Yes, that's right. I would suggest to go back to line 103 or something like that, if you'd like to start there, and just talk us through very briefly, skipping the slides, but go back to line around 103 and on our working document, and just talk us through a little bit about why Portugal became so attractive to you and your wife, Martha.
Well, everybody wants to talk about the tax advantages, but in fact, that's actually almost the last thing to add in. You've got to be comfortable personally that this is what you want to do. I mean, we wanted year-round warmth. Funchal has 280 days of sunshine, so it's permanently spring here almost. You know, you go up to 28 in the highs of the summer, and you go down to the highs in the winter around about 20. I mean, today it's 22 and sunny, for instance. That is not a bad climate to start with. We wanted to have good food. We wanted to have plenty of water. We wanted to have a civilized, crime-free position. We were getting a bit fed up with, you know, our 50 odd years in London. We're getting fed up of city centres, but yet actually we don't feel we're country bumpkins. So we wanted a compromise there. We wanted somewhere that was with very good medical services, at least as good as the NHS, if not better. We wanted excellent, sorry about the technology today, but we wanted excellent technology here. We've got 5G and the internet's fine, if only the computers we plug into them were as reliable.
Okay.
And we like nature walks, we like tennis, we like swimming. There are 2 golf courses here, but we don't play golf. So it ticks all of those boxes. All of those boxes.
So you did look at the mainland. You looked at Algarve, Lisbon, the Silver Coast and Porto, but you decided on Madeira in the end.
We did, because if you look at some of the, you could take those graphs earlier on expenditure to another level, take it down to more specific. I think if I was moving from Devon to Lisbon, I'd find that the housing was actually probably the other way around on price. You know, it's the top end of the market in Lisbon is around about 10,000 euros a square metre. Whereas I moved from central London in Marylebone at 21,000 a square metre down to less than 4,000 in Funchal. That frees up capital to go and invest, to generate more income, to give you more fun tickets to go and enjoy life. So,
well, indeed, John. Just to recap, we will be moving to the audience and taking some questions, our previous audience questions, and a few more in about 5 minutes' time. But John, just talk us briefly through. I'm looking at line 124 here. You've given us lots of great lifestyle reasons why Portugal, more particularly Madeira, appealed to you and Martha. Give us a summary of the fiscal reasons that you've decided. You're a very savvy financial guy. Why did you pick Portugal?
Well, you've got to start with the basics. If in fact there were no fiscal advantages, right, I'm 45% better off because the tax structure is very similar in Portugal. Somebody on average wage keeps 78% of their gross wage. And at twice that, at 70,000 a year, then in fact, you're getting a situation where you're keeping probably only 70%. So it's not that different.
From the UK?
From the UK. So there's quite a good advantage just in the basic numbers. Now we go to the next level. Are there some fiscal advantages to take care of that to make it even better? Well, for instance, I applied for the non-habitual residence. And I did that last year. So my pension is tax exempt in this country for 10 years. That helps. That's not bad. There was some grief coming from other states within Europe for Portugal, so they've amended that now. The pension now gets taxed at 10%. But it's still quite an advantage over paying higher rates of tax, say, in England. There are also benefits how you arrange your income. Suppose I arrange my affairs so that I get dividends from the United Kingdom, or I make capital gains outside Portugal. They are tax favored. Dividends for a non-habitual resident person, tax exempt. So in fact, I could, if I finessed it perfectly, could finish up with no tax. Now you don't do that. You don't do that because it's inconvenient some of the times. You just have to construct your income profile to match your expenditure. You want an income generated in euros, not in pounds. And you want different sources of income so that you can weather the storms that frankly are coming at us in a very predictable way. Because this pandemic, the effect of the pandemic is it's masking a depression with all the cash being pumped into it. It's rather like a bucket with a hole in it. They're throwing more water into it than the water's draining out at the bottom. But when they stop pushing that money in, that will change.
Tell us a little bit about, John, I'm looking here at line 143. Tell us a little bit about the thought process that you must go through about whether Portugal's going to be a holiday home, second home, or a lifestyle shift, moving everything over to Portugal, because there is the 5 or 6 year rule in the UK, which people are not aware of, are they?
Well, I think, there's two things. First of all, trying to keep two homes going is sort of rather like jumping a chasm with two leaps. You're going to make a mess of it, unless you can really afford it. You don't need that second home. So decide where you're resident, where you're going to be taxed. Now, your taxation on the OECD model, whether it's Britain or anywhere else, is essentially 6 months, greater than 6 months a year, determines your starting point for residence. So 183 midnights in Portugal makes you potentially tax resident here. It's almost pretty certain. You've got to make sure that you satisfy the rules of becoming resident here. You've also got to make sure that the UK or Ireland or where else you're coming from admits that you've left. Right? Because you can't just rely on the treaty to do that. So make sure that works for you. The rules in England are based on the statutory residence test, so that if in fact you're out of the UK other than 15 midnights, then in fact you're definitely not resident. And if you're 183 in Portugal, then you're resident here. If in fact you're more than 15 midnights in the UK, then in fact you go into what's called the area of ties, right? How many ties have you got? And ties are such items such as you pay tax in the UK for the last 3 years, you have a property available to you, you have dependents in the UK, you have major business resources in the UK. Then that will limit you, and that could be either down to 45 days, 90 days, 120 days, depending on the ties. And we can work that through. If I've done a matrix of that little workflow. I sent it after the last session. That was quite popular. I sent that to a number of people so they can see in a simplified form where their requirement is. Just make sure you know who you are.
In a nutshell, John, although moving to Portugal is an extremely appealing prospect, you really need to think it through correctly. If you're going to do it properly, realize that you have to really commit to being out of the UK for a minimum of 6 years to be taken seriously by the UK tax authorities.
Well, you've got to avoid that trap of what they call temporarily non-resident. Because if let's say you move to Portugal, you strip out your pension fund, you take all the advantages of that, and then 3 years later you go back. Well, the revenue might then seek to look at you as temporarily non-resident, recharacterize all the transactions you've done and tax you as if you'd been in the UK. That's a disaster, right? So make sure that you know where you're being taxed. Don't compromise on that. There is no compromise. You're either one place or another.
Right.
And then the planning's easy.
So we're now coming very close to taking questions from the audience. So I know, John, I'm just going to run through a couple of key points starting around line 157. So I know that living costs in Portugal, particularly Madeira, are approximately 30% less than the UK. You mentioned that earlier in your slides, and probably 50% less than central London. Property prices also very modest in Portugal compared to other areas of Europe. Tell me, one question is that I think we're now going to take a question from the audience, and we had a couple of questions that we thought was useful. Just before we take the question, can I just take you through to line 262? So what are the results of your move compared with your expectations? I know you found certain things like the price of cars very high, haven't you?
Well, they're higher. There's quite a big tax on cars. I brought one car over last year to test it and to see whether it was suitable on the roads here, and was shocked to find the import tax on that was 38,000 euros, more than the car was worth. So they are expensive as a tax on cars, but it's not that much on a Golf. You're probably paying an extra 8 to 10,000 euros depending on the grade. In terms of quantifying the advantage, I reckon that I'm 4 times better off on the same capital. It's probably the best way to look at it.
Okay. Well, that sounds very appealing, I can assure you, to somebody sitting in rainy London. Okay, line 290. We've got a question from the audience on this as well. How is Madeira handling the pandemic?
Well, until a month ago, it's handling exceptionally well. We'd had no deaths. We only had about 400 cases altogether. 95% of those were imported because we're quite usefully, there's only one way into Madeira at the moment. There's the airport. So everybody is tested at the airport. Everybody. So they pick up the cases, you get those tests back within about 12 hours by text. You go into a temporary lockdown, self-assess. And then if in fact you've got the problem, if you test positive, you're put into a special hotel. So that was great. We had no deaths until a month ago. This month, we've lost one 97-year-old lady who had other issues attributed to the virus. We got 200 cases now being looked after in the island. And we just had a couple of days ago a gentleman of 94 who died. So 2 deaths. So compared with the rest of the world, we're doing pretty well.
So I should remind our watchers that Madeira is still on the exempt channel between the UK and Portugal. So you can still go to Madeira and return without having to isolate for 14 days in the UK. Just before we take a question from the audience, has the pandemic brought forward any opportunities in Madeira? It's sad to say, but if people are thinking of going to Madeira, are you aware of any special opportunities or any excellent value venues to stay in Madeira?
Well, if you've not been to Madeira and you like Portugal, I do suggest you try it before you finally commit, because it is actually a very special place. And one of the hotel groups, one of the largest hotel groups, is offering a 4 or 5 star hotel for 7 days at 150 euros. So if anybody wants to get that introduction, I can introduce you to the management there and you can avail yourself of that promotion. No doubt they'll try and sell you something, probably one of their packages of pre-buying hotel accommodation over a few years. But actually, even pre-buying, I talked to one chap who's done that this week, and he just sees it as, well, if they can fix the price today, I've got a fixed price in pounds, then in fact I've got a valuable concession. So have a look at that. I think other opportunities, sadly, I think we're going to see opportunities in when the banks start to pull back on people. I think there will be property bargains around, probably by about next March. That's happening. It's already happening, funny enough, in Dublin, where I've got some investments, and we're buying property there, which gives a good yield. But in Portugal, there's going to be bargains.
Yeah, sad to say. Right, first question from the audience. This is a particularly vital question for many people watching us, John. So this question is from Mike. This is line 315 if you're on your document. Mike says, I'm particularly interested in the tax implications of becoming a Portuguese resident. Okay, so he's obviously considering it. How are pension income, ISAs, investment income and property taxes treated? And he's going to keep ownership of a property in the UK. Are there capital gains tax implications?
Okay. Well, you can't assume that what works in England works in Portugal. An ISA, for instance, would not be as tax efficient in Portugal. It's just an investment. Investment income, if it's dividends, as I've mentioned earlier, if you can organise dividends to come across and you've got the non-habitual residence permissions, then in fact they can be very tax advantaged for a period of 10 years. On capital gains tax, we've kept a London house. And what we've done, we've got it valued, making sure you know what the exit price was. We'll need that document sometime in the future if we dispose of it, because as your primary home, it's tax exempt. Get it valued. If you're going to rent that place out and not be your primary home anymore, then in fact there will be a capital gains tax consequence at some time in the future when you dispose of it. Okay. If that's disposed on death, then obviously then that's not an issue. But if you dispose of it sometime in the future, then there may be capital gains tax to pay. But prices in London at the moment are high compared with normal. They've not gone backwards, so it's a good time to get a valuation.
Okay. What about premium bonds and ISAs?
I believe that well, the ISA is just taxed as an investment. It's not. It doesn't have the tax advantage. Premium bonds. I think the view. I spoke to an accountant about this recently. They looked at it as gambling. So
in Portugal.
In Portugal.
Yeah.
So then there are rules on different types of gambling, like the lottery, for instance, is taxed in Portugal, and in Switzerland, and I think in Luxembourg as well. And they pay about 50% tax on winnings.
We've had a question from the audience. What about wills in Portugal?
Well, we start to hit Brexit issues now.
Yeah.
There was a directive within Europe some years ago to allow people to elect the jurisdiction of the jurisdictions they have, to elect which one ruled on their wills. The United Kingdom, in its wisdom, opted out, which is not helpful. And at the moment, we don't know what the rules are going to be after January. It's a continuing theme here, but certainly this is something that you need to make sure you've got something sorted out. First of all, a lot of people don't have a will in the UK, and they should.
They should
They've got a government will in intestacy. It's probably not what they want. In Portugal, you have forced heirship, so you can't disinherit a child, for instance. So this is, I think, is something that's a job that we're going to have to keep on returning to, and it's work in progress at the moment, that one. But certainly make a will. And again, it brings back this point. You do need really good advisors. You need good lawyers, good accountants. I was fortunate that through the chamber, I'd met about 14 different people, all pretty good. I met some good advisors as well, all pretty good. And they were helpful. But I found one who actually had in-house lawyers, and they could be a one-stop shop for me, and is much younger than me, so that's good. He's not going to die before I do.
Oh, you're so cheerful, John. Okay.
No, it's practical. No, it's practical. You don't want somebody who's going to change at the wrong time, and you want to make sure that you're planning for both lives, not just one.
That's true. You have a responsibility to your better half as well, don't you? Now, talking of that, topically, we're going to address a couple of health questions, John. Now, we have a question from FR, who's one of our viewers today. Once there is no reciprocal arrangement with the UK, which obviously from the 1st of January 2021 there will not be, because just to recap to everybody, at the moment, British citizens can have an Ehic card, which is the free card that you get from the government via the NHS here in the UK, which allows you to access the equivalent of free National Health Service in Portugal. Now, obviously, that arrangement comes to an end on the 1st of January next year. So please go to the NHS website where it'll tell you how to reapply for the new generation Ehic card, which you can apply for in early January next year. The conditions will be different. For goodness sake, take out health insurance when you travel outside the UK from the 1st of January, because don't rely on reciprocal NHS anymore in Europe. But particularly, John, we've had a couple of questions from our audience. What is your view about local healthcare in Portugal and how to pay for it? What about private healthcare costs? This is Barry Ogilvie as well, asked us. What about private healthcare costs in Portugal and the best method to research them?
Right. Well, first of all, there's a good website from the UK government on this. I can send people the link if you want it, and that's constantly updated. The second thing is, it's the health service. If you're a resident here, you can actually join the local service, and it's actually very good. You do have to pay some nominal charges. I think to go to have an appointment is about €5. and there's another one which is about 15 euros. But it's not, A&E is 15 euros. So
Which
it's not big money.
Portuguese National Health Service. Yeah.
And Portuguese National Health Service, I've had the benefit of doing that in the 4 years I've been across. I managed to break my foot at one point. But that's not, I think it's superior to the National Health Service in many ways. It's not got some of the specialities, but they're very good. The private health side, I've also gone private as well with that, to get x-rays and things. The price is very modest for private healthcare, very modest. And then I had the situation where, because my wife's American, we have to apply for the golden visa for her to get all the Schengen side all sorted out. And we bought private medical insurance there. Now, because we needed to do it quickly, I wanted it without the need for a medical exam to speed things up. I'm 72, my wife is 62, and we're paying 230 euros a month for 60,000 a year of benefits. So that seemed to be not that bad compared with the UK. I'm paying £330 in England. But you've got to watch out with this private healthcare, because this hockey stick effect of premiums going up every year, that's the big problem. That's the big problem. So I think there's a bit of an over-reliance on this need for private medical. I'm not totally convinced that it's great value for money.
You could argue you should save it all up anyway and pay for the private operations as you need them, you could argue, because medical insurance inflation is significant every year, isn't it?
Well, well, I don't want to get into some of the beliefs, but in fact, building up your immune system is actually what you need to do.
Oh,
change.
that's true.
There's a great book called Living Long, Dying Short, which actually sums up some of the habits that one might want to change.
Yes.
You know, and you've got great food here, so nutrition is a big issue. You know, I'd rather spend the money on that than a lot of insurance, to be frank.
We've got a question here, John, from Colin McDonald, who's watching us today. Colin, hello. Colin's asking, we are solely going to be relying on our UK state pensions once moving permanently to Portugal. Is this feasible? What do you think?
Oh, it depends when. It depends when, you see, because if you're doing it at the moment, until the end of December, the indexation side seems to be assured. That's what so
for the UK
Treasury
to continue to
uplift it. You know, it's going to go up by 2.5% in April. All those sorts of benefits. We don't know what they're going to do in January. That's the big issue, and you're stuck in pounds, so you're going to suffer the euro shrinkage if the pound continues to decline in value. So that's a worry and a concern. So one needs to think about the way in which you organise that and your timing.
Because the UK government will pay a UK state pension in sterling, won't it? And it'll then have to be converted into euros if you're living in Portugal. And you could easily get badly burnt by the exchange rate.
Well, you get caught on the exchange rate. You also get, if you're not careful, you're going to get caught on the so-called commission-free exchange of money. It's not commission-free. There's a spread there, and some of the spreads are stupid. Right? You've also got this worry from both Barclays and Lloyds about closing UK bank accounts. Now, that again is back to the euro thing. That's the problem there. The euro agreement, there isn't one, because all those banks rely on what's called passporting. And at the moment, they don't. If they've not got European PAN licenses, then in fact you may have some issues about Lloyds and the rest. Now, the only thing I've found on that is that the MP who's the chairman of the Treasury Committee, Mel Stride, I think it is, the MP from Devon, all he's asked is the FCA and the banks give some reasonable notice. Well, they can't give reasonable notice on something that they don't know what's going to happen, because the government have told them what's going to happen. So it's a bit of a catch-22 there. I have found one solution, though. I have found a solution with some of the challenger banks, where they do have cross-border permissions now. And they also have facilities to change money. So again, when it comes around to giving clients advice, I'm testing 4 of those cards myself at the moment to see if they make sense.
Okay, we have reached the end of our time theoretically, but we've still got several questions to go. So, ladies and gentlemen, I'm going to continue for another 5 or 8 minutes or so, just to cover some of these great questions that are coming in. John, Graham Ely wrote to us earlier. He is actually living in Funchal, amazingly, in Madeira. He's saying he will not be a permanent resident in Madeira, and we're using this as an example of people who basically don't live in Portugal all the time. So he's not a permanent resident in Madeira. He just comes and goes as he likes. What will happen after the 1st of January 21? Does he need to register or request a permit in Portugal? Don't forget, he's tax resident in the UK and spends a big chunk of his year there, presumably, but he hops backwards and forwards to Portugal a lot. So what will happen to people like that after the 1st of January 21?
Well, I think you've got to look at the worst case scenario, and that's the default position on many European countries where you're allowed to spend, as a tourist, 90 days out of every 180.
In Europe, yeah.
In Europe. So you may well fall back on that. But again, until they sort out some of these cross-border agreements in January, we don't know. We don't know. But I think plan on, you should be pretty certain about the 90 out of every 180. At least you can plan on that basis.
So he can stay for 90 days out of 180 in Portugal without having to go down to the Portuguese town hall, request a residency, anything like that. But he would effectively maintain all his UK bank accounts and just literally pop backwards and forwards to Portugal.
He's in principle, you see, he's UK tax resident, isn't it?
Yeah.
So we've got to treat him as that. But people coming from outside the EU have got this 90-day position. And that's probably the safest thing to plan on. Hopefully that will improve once our politicians get their act together.
Okay. Right. We've got a question from Dee Gibney, who asked us earlier, if you're going to work in Portugal before retiring, but you still have an income from a business in the UK or Ireland, how does that affect your tax implications?
Right. If it's a UK business, then it may well be wise to look at the dividend route as opposed to a salary route, right? Because that is the information there is clearer at the moment. And if you've got the non-habitual residence here, that would be very tax efficient, probably. It's quite useful actually if you want to prove your residence pretty early on, to have a contract of employment in Portugal, because that's one of the conditions to prove that and demonstrates that you are non-resident. It's got to be of the right format. Again, you need a good accountant to do this. I've set up a company here. It's in the tax zone in Portugal. It only has 20% corporation tax till 2027, which is so 5% corporation tax and 20% on dividends. So it's quite a useful thing to do. So it's not, but again, you've got to get down to specifics, help the guy plan the detail, practice on paper, and get to work with somebody who can work with you over time, because laws will change. They will change, and you need to keep it always up to date.
Right. Okay. Got a very good question here from Charles Stevens, who has asked, I know you saw this question earlier, John, so hopefully you've had a chance to think about it. So Charles Stevens is asking, he owns property in Portugal and has a fiscal representation, and he's submitted tax returns in Portugal for the last 11 years. But he's only been in Portugal part-time for that period, and he's continued to work and pay tax in the UK. So Charles has now stopped work and he wants to spend more time in Portugal, but less than 50% of the time. He's got his Portuguese residencia already 12 months ago. He says he will shortly start drawing down from his private pension. Does Charles qualify for NHR status, and can he get his pension drawdown paid directly to Portugal to avoid UK tax?
Whoa.
we may not be able to answer this one online. I don't want to put John under too much pressure here, Charles. You may need to have a private email.
Yeah, we can take that one offline, but certainly the key thing there is to work out whether the tax authorities here in Portugal regard him as having been resident in the last 5 years. That's the important thing, because if they can be persuaded that he's not been resident for tax purposes, is just accounting for tax here, then in fact there's a chance that we might be able to get the non-habitual residence side sorted out. But really, he's asking as many questions as he's posing many questions for me as he's giving me.
Okay,
ideally, his pension we should be able to get as a nil tax code, and then it could be paid. But then you see that it may well be possible to, will his pension company pay it out of the UK, and that goes us back to the banking problem. So
there's a few nitty gritty questions in there, Charles. So I'm going to suggest that you and John have a quick chat on the email after this. We're going to put John's details up on the last slide, which we are approaching fast. We're going to give it another 5 minutes because there are some couple of good questions, and then, ladies and gentlemen, we're going to have to finish because I'm conscious you're going to go get bored with us chatting. But there's some good stuff being discussed today. Right, I've got a good question for you here, John. Again, if it's too technical, we can take it offline. But Helen Sweeney, this is a very relevant question because a lot of British people are thinking about going to Portugal to work remotely, because why don't you sit in front of your laptop in Portugal for 6 months or 9 months next year instead of sit in the UK? And Helen is asking, if I'm working for a UK company remotely from Portugal and I'm a permanent resident in Portugal, how does income tax work? So Helen is sitting in Portugal. She's Portugal resident, but she's working for a UK company. I think, actually, funnily enough, Helen, if you go to the movingtoportugal.org.uk website, under our FAQ section, we had a very similar case just the other day, and the answer is in there, and I can't remember the specifics of it, but I have a feeling you have to fill out a tax form in Portugal and in the UK, and then the UK pays your salary, or your UK employer pays your salary tax-free into Portugal. And then obviously, assuming your occupation qualifies for one of the 20 special occupations in Portugal that allows you to have a reduced income tax, then you pay the reduced income tax on that income from the UK. Am I right, John? Is there anything?
Again, the devil's in the detail. Is this her company? Where is the management and control? How many days is she spending in different places? If you're in the UK for 30 days working, and the day is defined as being there and spending 3 hours at work, then in fact you become resident UK. So there's many. I think it's a good example of making sure that all the advice is totally bespoke to the individual. We're all individuals, and cookie cutter stuff doesn't work. It's a recipe for making a disaster. You do need to find a good advisor and work with them, right?
Okay.
And also, the other thing, when you're dealing with that advisor, make sure they tell you what the income is that they're taking from it. I found some banking situations here where the commissions are horrendous. Yeah. I haven't seen such rip-off commissions since the 80s. And it's any decent professional will be very open about their remuneration structure, and you might as well get comfortable with that on day one. Ask the awkward question, because you hopefully be dealing with that person for a long time in the future. So set out on the right footing.
We're going to take a couple of quick money questions now. Helen Sweeney's asking us, do we have any recommendations for protecting currency exposure on large capital outlays, e.g. purchasing property? I would say yes, work with a currency exchange expert who can get you much cheaper rates than the bank. John, you would say the same, wouldn't you?
Well, there's two transactions. There's the regular one, and some of the prepaid cards which have multiple currencies on, which I'm working through 4 of those at the moment, working out which is best. I've already dismissed one because I think they're going bust. But the other 3 that I'm going to be working with, that's for the regular stuff. If in fact you're planning a property purchase, really predicting currencies is like catching a falling knife. But what you can do is forward contracts, so at least you can fix your budget against your purchase. That's normally a very good thing to do, and you would need a good currency firm to work with.
I should say the Chamber's got a couple of members from the currency business, and it is amazing how much money you can save. simply working with a currency specialist rather than exchanging money through your British High Street Bank. You can save thousands and thousands of pounds. The British High Street banks are taking a good commission on your euros and sterling. So make sure you look at that. And John, we've got a question here from Marissa Jordan. The banks in Portugal are offering lower rates to foreigners. When I last checked, it had dropped. Yes, Marissa, just to confirm what we know about mortgages in Portugal, basically the mortgage interest rates in Portugal are very, very low at the moment, aren't they, John? They're 1 to 2% at the moment. The issue is that as a foreigner buying property in Portugal, you do have to put quite a hefty deposit down, up to 30% deposit on the property that you're buying, but you should be able to access those very good low Portuguese mortgage interest rates from Portuguese banks. Would you agree with that, John? Have you got much experience with mortgages in Portugal?
Well, I through the chamber, I met a very good mortgage specialist, and I've because that's the sort of business you've got to be really on, have your finger on the pulse with. And I know a lot about it, but I'm not good enough to actually organise the mortgages for people. I don't have those contacts. But generally speaking, the mortgages here are, as you say, cheaper than in the UK at the moment. Matched against a euro asset, that's sensible. Why would the reduction be a bother to the question? Oh, sorry, Mr. White.
Well, I think we've answered the question actually. So Marissa was asking a question about mortgages, but I think which wasn't entirely clear, but I think I've now understood it. So yes, Marissa, in a nutshell, the Portuguese banking authorities or the Portuguese banks that issue mortgages to foreigners do ask for a higher level of deposit, up to 30% or a bit more, than they would to a Portuguese national. It's just the way they are, but the interest rate you would be charged would be exactly the same. Okay, I think we're going to take our last question. We have a question from Gay Gibson. John, I know you may have replied to Gay already, but it's quite an interesting question. So this is our last question, ladies and gentlemen, and then we're going to wrap up. So Gay Gibson was asking us, could you please advise if buying a property in Portugal, and she's hoping to get her golden visa, can the property be purchased with a mortgage, or does the investment have to be fully paid with cash?
Yes, you can buy it with a mortgage. Nice and easy.
And qualifies for golden visa.
Yes, it's the purchase of the property that matters, not the amount of capital you're bringing into Portugal. So okay. That's so the borrowings. Mind you, you've got to be a bit careful there. If she's going to rent it out, be careful, because the interest is not a deductible offset against rents. So be careful.
Okay, right. Okay, ladies and gentlemen. Right. Well, I have to say we've run over by 10 minutes, but it's always the case because we get such good questions. So I would like to begin wrapping up. Thank you to our audience for all the questions we've had today. And John's happy to answer further questions. Once we've finished now, once we've pressed the off button, we will be emailing all of you with John's contact details and a few salient points from the seminar. And it just remains for me to thank everybody who's taken part, and to give you a couple of other points, which were that John will be doing another webinar on his own account, not through the chamber. John, can you hear me?
Yes, I can. Yes. I noticed the slide. That's one of the
slides gone up with your contact details. That's right. It's just to say that. Sorry. Yeah.
But it's the 8th of December, and it's going to be with Stanbridge Family Office in London. I'm doing a talk for them on tax and the development of tax coming out of the pandemic.
Right, so 8th of December. So anybody who would want to attend John's webinar on the 8th of December, you can email him, and he will add you to the attendance list. And do feel free to add John and myself on your LinkedIn profile. That would be great. We can all help each other that way. And if you found this beneficial and would like to attend our next webinar, our next Moving to Portugal webinar, which will be probably more on topics of buying property, the NHR. So we're going to move away from specifics about pensions and stuff, more to properties, lifestyle, other questions you might have, please have a look at movingtoportugal.org.uk, where we've got details of our upcoming webinars. It just remains for me to thank you all for attending. John, thank you very much indeed for being with us today, and I hope you have a great move to Portugal. Thank you.